The news day continues here on One News Now. I'm Danny Laurel. Now here are the biggest stories on the economic and corporate front. The country's agricultural production contracted year on year in the last leg of 2022. Fresh data from the Philippine Statistics Authority showed that the value of production in agriculture and fisheries dipped at an annual pace of 1% in the fourth quarter. Full year 2022 farm output contracted by 0.1%. The PSA attributes the decline to a lower value of production of crops, which accounted for nearly 60% of the overall output. A dip in fisheries' production value also weighed down the latest figure. On the other hand, the agency noted the expansions in the production of livestock and poultry in the same quarter. President Bongbong Marcos admits that the country could improve its cold storage to help local production. The president said the onion crisis exposed issues in the country's agricultural production, and because of this, Marcos Jr. assured that the government is laying down plans to improve the local production.
Lumabas talaga yung sa onion na problema ay yung ating cold chain. Kulang-kulang ang cold chain natin. We need more cold storage, we need a better, stronger cold chain para ma-maintain naman natin, ma-preserve naman natin yung agricultural products.
The president made this remark amid the arrival of imported onions in the country, which are expected to bring down local onion prices. Most of the imported onions are sold at Divisoria. Based on prices in the market, imported onions, both red and white, are found to be sold at cheaper prices than those produced locally. Vendors are now complaining of the imported onions coming into the market as they have been securing supplies from local producers at a higher price. Meanwhile, the government plans to borrow 200 billion pesos from the domestic market in the month of February. The Bureau of Treasury said it will borrow 60 billion pesos in T-bills and 140 billion pesos in T-bonds next month. The BTR will offer 5 billion pesos worth of 91-day, 182-day, and 364-day T-bills on January 30, February 6, 13, and 20. It is also looking to raise 35 billion from 13-year T-bonds on January 31st and 35 billion from 5-year T-bonds on February 7th. The government raised 212.4 billion from domestic borrowings this month. That's higher than the program 200 billion. Now, one of the last indicators to calculate the full year GDP growth last year dipped. And what does this mean for the economy? Here to chime in, we have Dominique Velasquez, Chief Economist at China Bank. Good morning, Dominique, and welcome back.
Hello, good morning, Danny.
All right, let's try to parse through the agricultural issues. So farm output down 1%, rough rice, which is our biggest staple, down 1%, fisheries down 5%, 4 straight quarters of a decline, offset in a way by poultry and livestock up. Tell us, is this a one-off issue because of problems that might have been there due to the climate change or storms, or are these persisting issues that are going to be affecting us in the very near term?
So thanks for that. I think hopefully this is going to be a one-off issue. If you remember, around August, the DA was already warning that rice production might fall in December, really because of the war in Ukraine. You had higher fertilizer prices, so farmers were actually discouraged to plant. The size of their production was actually smaller. They were planting less.
Okay.
So we have that as a one-off. So hopefully now fertilizer prices have come down a little bit. It will return to normal. In terms of fisheries, there was a time also that there was a ban in the West Philippine Sea. So we've seen that. That's already done, but we see the production output right now. So hopefully just one off for these items.
Okay, very interesting points that you've mentioned there. Does this also mean that the supply side driven inflation, which might have been agriculturally linked, has reached its peak?
Maybe a little bit. So we don't have that war in Ukraine. We still do have a little bit of that domestic supply shortage, really because of the timing of importation and production, right? Hopefully, moving forward, this gets settled. We see now that the DA is a bit more open to importation. So really, to get the timing right. For example, so you just reported onions. We were already seeing it maybe 3 months ago. So that was actually the DA monitoring that there was no supply of onions already. So I guess more consistent in timing issues in terms of policy on how much to import also, because I think the DA and President Marcos was a bit iffy on importation previously. But more and more with the prices of food items increasing, I think as a stopgap measure, it still is a valid option.
Is this still a stopgap measure at this point, especially since the agricultural output might just simply not be enough to meet demand? And if so, how much longer can we be importing before we feel the pinch? We just reported earlier on that the prices of imported onions are much cheaper than the ones that are being produced locally. Will this not have, a harmful effect on our production moving forward?
I guess hopefully stopgap still. There are some initiatives like the cold storage facility that President Marcos was talking about, right? But it also takes time. So there are a lot of initiatives that can be done in the agriculture sector, improving production, but that's going to take time. In the meantime, we really do have to import to bring down the prices of food. I think likely in terms of timing, what is being communicated with regard to the extension of that EO on food is that we do have this 1 year to get production up, 1 year to improve production, and then eventually we revert back to the original plan on ensuring that domestic producers are also favored.
Was this agri output falling a surprise compared to what you were estimating, and does this in any way impact your GDP outlook for the full year coming out, of course, tomorrow?
Not so much. We were actually expecting agriculture to soften in the fourth quarter, really for the reasons we've mentioned before. Aside from that, we do have that typhoons, I think Paeng and Carding. Carding towards the end of September, almost October, and Paeng also lowering production and also not benefiting the farmers, right? So we have that 2 typhoons end of the year. However, for Q4, we think still positive. Agriculture sector might soften or now negative, but you have manufacturing, you have services. Manufacturing, we were actually expecting this to be a little to soften also because of high input costs. You have that wage increase in mid-2022. But if you look at the Purchasing Managers Index, it's in expansionary territory all throughout 2022. And then I guess for services, another good thing coming out now is that you have 3 things already driving your services momentum. First, we had sort of a 100% physical celebration during the holidays. No restrictions whatsoever. And then you have tourist arrivals. So, for example, for the whole 2022, DOT reports returning overseas Filipinos, foreign tourists, to have reached 2.65 billion. 40% of that was just Q4 alone.
Wow.
So we have that momentum. And then lastly, you have that face-to-face classes in November.
Okay.
So full face-to-face classes, not just benefiting, teachers, but also those engaged in auxiliary services like your canteens, your drivers. So those.
And are you confident, given this, as Finance Secretary Diokno, that we will actually be beating the government targets for at least last year? What's your projection?
Our projection right now is a 7.5% in the upper end of the government's target. Hopefully, everyone will be happy if the GDP again surprises on the upside. There's nothing wrong with that, even if the projection is wrong, right? In recent months, there has been like a wide range of, let's say, the range of projection. It has actually been quite large, really because of this anticipation of a return to normal. So we were not in normal times. We do have base effects. But this Q4, these base effects from the 2020 very down GDP, and then 2021 you get 12% growth, right?
Yes.
Growth rates, right? So this 2022, our estimate is that by Q4, these base effects have dissipated already. So
Okay.
we get to see the normal trend of GDP growth.
Okay, well, that was my next question. No? You mentioned low base year, 2021, revenge spending, OFWs coming back with some money, and then reopening of the economy. Is this going to be sustainable in 2023? What are the differences that you will be seeing fundamentally in the economy this year compared to last year?
Well, for 2023, I think we hear these recessions in advanced economies, right? For us, we think the Philippines will actually be a little bit more insulated just because we do have smaller trade relations with the rest of the world. So, for example, our exports to GDP is quite small compared to, let's say, Singapore and also Vietnam, right? So usually, even when there are global recessions, the Philippines come out of it actually a little bit better compared to our neighbors. Aside from that, of course, you have high interest rates. Governor Medalla has been signaling that they're going to keep the interest rates at the maybe terminal rate of 6.25 for the rest of the year. So that prevents some business expansions, some loan growth. So we do have those headwinds. However, the good thing is that we had this U-turn in policy of China, right, in December. It was actually quite a surprise. So that will actually lift not just the Philippine economy, but I think maybe global growth. So in terms of, for us, in terms of trade, China is a major trade relation in the ASEAN region as a manufacturing hub in the region. And then also services for China. Chinese tourists were actually the top tourists in 2019, and then they're nowhere to be seen in the pandemic years. But that will actually improve.
All right, so highs and lows here, but like you mentioned, no, some of those risks being circumvented hopefully by the China story. Big expectations there, hopefully, and thank you so much for that estimate. We'll be checking in on that, of course, in tomorrow's broadcast. Thank you so much, Dominique Velasquez, Chief Economist of China Bank. We'll be back with more stories after the break. Keep it here on One News. You're still watching One News Now. I'm Danny Laurel. Now, as promised, the Philippine Stock Exchange did fix the technical glitch that caused a delay of a little over 30 minutes into trade. The market started opening at 10:08 a.m. And we did see quite a bump up this morning, up by 19.35. That's just about 0.3% to 7,060 levels here. Very quick peek at the biggest movers of the day. You've got Emperador up by 2.7%, followed by JG Summit and Mondenisan. Still a few, let's say, consumption stocks, Wilcon, Jollibee, and URC sitting out this rally. Now, for more updates, visit News 5, the Philippine Star, and Business World Online. Visit our website, onenews.ph, for more in-depth analysis. You can also catch One News on the Signal Play app. Register for a free account now. That's at www.signalplay.com and stream One News live anytime, anywhere. I'm Danny Laurel. Join us again at 2 p.m. We are One News, all sides, all the time.